Welcome to the Noticias El Salvador SV podcast, a space for conversation and reflection where we explore current events in El Salvador and around the world. If you'd like to support this project, you'll find the payment options, PayPal or QR Bitcoin, in the content description. For those requesting interviews, please note that we are not currently offering podcasts in that format. However, if you'd like to advertise your products, please email us at the address in the description. Find us on your favorite platform as Noticias El Salvador SV. And welcome to the Deep Dive. Now, while our sources often stem from the Noticias El Salvador SV network, our focus here is really global and analytical. Today, we're diving into, a really complex set of interconnected data. We're going to be looking at the global financial markets, quite volatile lately, and some intense geopolitical conflicts that are, frankly, threatening stability in certain regions. And of course, we'll analyze the latest metrics coming out of El Salvador, specifically around its unique economic path involving Bitcoin.
It really is a fascinating time, isn't it? You've got these critical intersections happening, high finance bumping up against national security, and then you see state-level policy decisions meeting these long-term structural risks. So our goal for you, the listener, is really to get past just the headlines. We want to synthesize the most important economic signals, and we'll start with a look at the crypto markets. Then we'll try to connect those financial moves to the strategic security things we're seeing around the world, and finally bring it all back home, so to speak, to what's happening developmentally inside El Salvador. We're really aiming to pull out those key insights, those moments that make you go, aha, from all the noise out there. So let's start where the money's moving. Global volatility and how institutions are positioned.
Okay, let's jump right in. The crypto market, as I mentioned, has been, a bit of a roller coaster. We saw Bitcoin drop, about 20% from its recent high? That's pretty significant. And Ethereum also took a sharp dive, right? From nearly $4,900 down to around the $3,000 mark. But now, despite all that turbulence, our sources are indicating a technical rebound seems to be underway for both of them. What's the immediate spark for this upward move?
Yeah, that's right. And the immediate driver. It seems almost entirely down to psychology, really. It's about forward-looking expectations heating up on Wall Street. What's really giving things a boost right now is this growing expectation that the government in the United States is finally going to sort out its extended shutdown and reopen. When a government closure, especially one that's dragged on for a record 40 days, looks like it's about to end, the market immediately starts pricing in a huge drop in uncertainty and potentially more liquidity.
Right, that reduction of uncertainty is huge. Because the actual shutdown itself had real negative impacts, didn't it? I mean, we saw reports mentioning 2,000 flight cancellations, forecasts that air traffic could grind almost to a halt, disrupting trade, supply chains.
Oh, absolutely. The operational impacts were very real and costly. But the market, it tends to look ahead. The shutdown itself creates this kind of financial freeze, right? Agencies that issue permits, approvals, handle regulations, they slow down or stop, and that stalls investment. So this positive feeling, this expectation that a bipartisan deal, Democrats apparently backing the Republican proposal to finalize the budget, will end the shutdown. That expectation suddenly outweighs the actual costs already incurred. The market anticipates this flood of liquidity once things stabilize, and that's expected to boost assets across the board, including, the very sensitive crypto sector.
Okay, let's drill down a bit into the actual trading behavior. Because the on-chain data, that often tells a more interesting story about conviction than just looking at the price, right? We really need to examine Bitcoin and Ethereum's internal metrics closely.
Yes, exactly. And if we dig into the data, say from Glassnode, they track key things like wallet movements, where coins are concentrated. The picture for this rebound looks, precarious. It's full of mixed signals. For Bitcoin, there are two really critical price levels we have to watch. First, there's the $110,000 level. That looks like a massive zone of concentrated supply. What that means is a lot of people bought Bitcoin around that price, and now they're likely eager to sell, either to take profits or just get their money back. So that's a huge wall of resistance. Strong selling pressure potentially waiting there.
Okay, so that's the ceiling, the resistance. What about the floor, the demand side, the buying?
There is some accumulation starting, yes, down in the lower range, specifically between about $102,000 and $105,000. However, the data suggests this buying conviction. It's pretty weak, actually. The buyers coming in right now, they just don't seem to have the volume or maybe the coordination needed to soak up all the selling that's expected, around $110,000. So it suggests that unless we get some big positive news, like real clarity on U.S. government policy, the price could easily just bounce off that resistance and head back down for deeper correction.
What's really interesting here, and maybe a bit concerning, is this contradiction we seem to be seeing between two major investor groups, the big institutions and the long-term holders. Data from CryptoQuant apparently points to renewed institutional interest in Ethereum, but for Bitcoin, the signals look, well, darker.
Yeah, this is where the story really diverges, and it's critical. The CryptoQuant data does suggest that, sophisticated institutional players are coming back into Ethereum. They seem to be providing support, helping ETH hold that crucial $3,000 to $3,400 zone. That signals some confidence in Ethereum's ecosystem, maybe its future upgrades. But then you contrast that with Bitcoin, and you see almost the exact opposite behavior from the long-term established investors, the ones people often call HO dealers.
Right. And what are those veteran Bitcoin holders doing right now?
They're showing signs that look a lot like capitulation, unfortunately. We're seeing old Bitcoin wallets. These are reserves held by folks who've often been through multiple market cycles. Even the big crash in 2022, they're transferring their coins onto major exchanges, specifically Binance. And the scale of these transfers, it's the largest we've seen since last July. Now, historically, that kind of action is a classic, pretty unambiguous signal. It suggests serious selling pressure is coming from the most patient, usually highest conviction part of the market. When the veterans start moving coins like that, it often means they think the near-term upside is limited, or maybe they're just cashing out due to other financial needs.
Okay, so that potential wave of selling from long-term holders, it needs huge, consistent demand to absorb it without tanking the price. And in this cycle, a lot of that institutional demand was supposed to come through those new ETFs, the exchange-traded funds. Is that mechanism actually working? Is it soaking up the supply?
No, not at all right now. And that failure to absorb supply is really the central structural problem facing Bitcoin at this moment. The inflows into those Bitcoin ETFs have just dropped off a cliff. We've seen a massive $2.3 billion outflow from their peak value. That's the single biggest exit we've seen since way back in May of 2025. So this weakening institutional demand means there just isn't a strong enough buyer base left to soak up the supply being offloaded by these long-term holders, especially at higher prices. Without that fresh, sustained institutional push, the market just lacks the fuel it needs to break through those key resistance levels. It really reinforces the idea that this is more of a structural correction we're in, not just a quick technical dip. The health of those ETF flows is like the main barometer for institutional conviction right now, and that barometer is pointing down sharply.
All right, let's shift gears now and focus on a country where Bitcoin isn't just an investment asset, it's actually national policy, El Salvador. Since 2021, they've had Bitcoin operating as legal tender right alongside the US dollar. And they've been very successful in marketing themselves globally as, the Bitcoin country, a kind of living laboratory. But the big question is, how is this really aggressive, unique strategy actually translating into tangible, verifiable economic results on the ground?
Yeah, when we talk about El Salvador, it's crucial to carefully separate the powerful political narrative of the marketing from the hard economic data. Now, on the narrative front, the government has been incredibly active. They took proactive steps in 2025, financially speaking. They boosted digital security. They strategically moved their significant Bitcoin reserves into 14 distinct separate addresses. That's a key move for better custody, better risk management. Reuters did confirm the official portfolio is in the thousands of Bitcoin. And we also know they successfully mined nearly 474 BTC by 2024 using their geothermal energy resources, which itself is a potent symbol of their whole self-sufficiency push.
Okay, so this high-profile embrace of Bitcoin definitely creates a strong global image. But for a country that still relies on international financial support, what's the view from the outside looking in? Specifically, how is the International Monetary Fund, the FMI, viewing this whole Bitcoin strategy?
The FMI relationship. That provides a really critical counterpoint to the national story. Look, El Salvador secured a vital 40-month, $1.4 billion agreement with the FMI. That deal essentially gave them crucial financial breathing room, helped stabilize their government debt market. However, the FMI's official position is sharply different from the national marketing message. They have stated officially and repeatedly that as far as they can see, Bitcoin adoption has shown, and I quote, limited or no visible direct improvements on the actual real economy so far. That's a pretty sober assessment, right? It fundamentally separates the excitement and the price swings of Bitcoin itself from the core economic metrics that really determine the country's well-being. Things like sustainable GDP growth, jobs, poverty levels.
So that suggests that even though Bitcoin is legal tender, the actual day-to-day adoption by ordinary Salvadorans might be much, much slower than the international headlines suggest. Is there data backing that up?
There is. The central bank data paints a pretty modest picture of real-world adoption. You'd think one key measure would be remittances sent via crypto.
Right.
Theoretically, that should be replacing traditional bank transfers or money services. But what we actually saw was that crypto-related remittances fell in 2024. That strongly signals that the general population is, for the most part, sticking with the old ways, the established dollar-based channels for sending money home. So that legal tender status hasn't yet sparked this huge fundamental shift in how most people handle their daily finances or receive money from relatives abroad.
Okay, so if the Bitcoin policy isn't the main engine driving immediate economic health, what is behind the success stories we're hearing about? Particularly that incredible growth in tourism.
Right, the tourism and investment numbers tell a much clearer story, and it's not necessarily crypto-specific. The country hit record visitor numbers in 2024, and that continued into 2025 with double-digit growth, according to MIT YAR and the U.S. Investment Climate Report. Our analysis strongly suggests that this tourism boom is overwhelmingly fueled by the dramatic improvement in security, the significant drop in the country's traditional risk profile. This safer environment is attracting a wave of capital injection that really goes far beyond just crypto investment. It's bringing in conventional foreign direct investment and tourism dollars from regular global travelers, not just the niche Bitcoin crowd.
That makes sense. So the improved governance through better security kind of lays the foundation, and then they can specifically cater to the Bitcoin community to keep that high-tech global hub image going. How are they actually building out the infrastructure for that?
They're making some very visible, quite smart investments to handle the influx of the crypto community. A great example is the new Bitcoin Country Information booth they just opened at the International Airport. And this isn't just some basic info desk. It's actually staffed by students from the CUBO Plus program. That's a program focused intensely on advanced development in Bitcoin and the Lightning Network. It's a strategic move. It ensures that when these high net worth international developers, entrepreneurs, enthusiasts arrive for big events like adopting Bitcoin 2025 or Bitcoin Week El Salvador coming up in November, they're immediately met by knowledgeable, technically skilled local staff. It's basically saying, look, we don't just talk the talk on Bitcoin, we actually live it, we build on it here.
The narrative management is definitely strong, but the underlying financial mechanics, they still need really close watching, don't they? What are the key, maybe 3 short-term things that analysts really need to track to measure if this unique experiment is succeeding or not?
Absolutely. Analysts are focusing on 3 distinct areas to really try and separate the BTC effect from the benefits coming from better security and just conventional economic growth. First is transparency and reporting. This is non-negotiable, really. The FMI, other international bodies, they demand absolute clarity. So we need constant monitoring of the official Bitcoin reserve addresses, confirmation of exactly how they're being held in custody, and this is crucial regular mark-to-market valuation. How much are these volatile assets actually worth today? Any lack of transparency here creates fiscal risk and really undermines international confidence. Second, the volcano bonds. We need to keep a close eye on the execution, the actual issuance volume of these unique bonds. They got regulatory approval for 2024 debut. But maybe more importantly, we need to see how they're received in the secondary markets. How do they trade after issuance, especially on platforms like Bitfinex Securities? The liquidity and the demand for these bonds will be a direct measure of how much appetite sophisticated institutional investors really have for El Salvador's Bitcoin-linked debt. And finally, number 3.
Real economic indicators. It's absolutely essential to watch the independent conventional data points. We need to track tourism numbers, foreign direct investment flows, what's happening with traditional dollar remittances, and maybe most importantly, the cost of the country's own government borrowing its sovereign financing costs. If these metrics keep improving, even when the price of Bitcoin is flat or falling, well, that would indicate the broader economy is successfully maturing and maybe insulating itself from crypto's volatility.
Okay, let's unpack this. We have just covered significant movements in global finance and the complex economic transformation within El Salvador. Before we connect these national indicators to the rapidly escalating global picture, we want to take a moment to remind you, our listener, how vital your support is for continuing this deep dive analysis. If you find value in these insights and the context we provide, you can collaborate or donate via PayPal or QR Bitcoin. You'll find those options easily accessible in the content description. Your contribution allows us to dedicate the time and resources necessary to synthesize this complex material. All right, now we shift from the relative domestic stability achieved through security improvements in El Salvador to the much sharper edge of international tensions. The current geopolitical landscape seems defined by some pretty intense strategic maneuvering by global powers. Our sources are highlighting a really tense dynamic unfolding between Russia, Venezuela, and the United States, playing out in the strategically critical Caribbean region.
Yes, the situation around this Russia-Venezuela nexus seems to be rapidly heating up regional tensions. Russia has made a very explicit statement, basically saying it's ready to respond to any request for assistance from Venezuela. Now, Moscow is framing this as purely a strategic, sovereign partnership, implicitly warning against outside interference. And this statement comes right as they perceive an increase in U.S. military presence in the Caribbean, which Russia clearly views as potentially destabilizing.
What are the specifics? What kind of military help is Venezuela allegedly asking for, and how does that ratchet up pressure on the U.S. and the region?
Well, according to reports, Venezuelan officials under President Maduro have allegedly asked for some pretty concrete military tech and logistics support. We're talking about repairs for their existing fleet of Sukhoi combat jets, upgrades to critical radar systems, and even the delivery of new missile systems. Now, this kind of request signals Venezuela is looking to bolster its defensive capabilities, presumably to counterbalance what they see as increased political and military pressure from the U.S. operating nearby in international waters.
Okay, but the United States naturally has an official reason for its increased military activity in the Caribbean. What's the official line, and how does that compare to what security analysts are saying?
Washington's official stance is that its Caribbean deployment is strictly focused on counter-narcotics, targeting drug trafficking routes. That's the claim. However, if you contrast that official line with analysis from regional security experts, you get a significantly different interpretation. Analysts widely see this deployment as part of a much broader ongoing strategy of political and military pressure aimed squarely at the Maduro government, designed to kind of limit their influence and operational space in the region. The real difficulty lies in separating genuine counter-drug operations from strategic power plays and signaling.
And moving beyond the Americas, volatility is definitely still simmering in the Middle East, challenging existing ceasefire agreements. What are the key recent flashpoints there that are threatening that fragile peace?
Yeah, the sources confirm several incidents that really threaten to unravel regional stability. We have reports of drone attacks occurring in southern Lebanon, specifically targeting the towns of Bint Jbeil and Barachet. These apparently resulted in injuries to at least 7 people. What's significant is that these strikes happened despite the formal ceasefire that was agreed upon between Israel and Hezbollah just last year. So it signals a very dangerous return to localized conflict.
And the diplomatic fallout from the wider conflict is reaching some really new, maybe unprecedented levels, particularly this legal action taken by Turkey.
Yes, that action is certainly significant. The Istanbul Public Prosecutor's Office has actually issued an arrest warrant for Israeli Prime Minister Benjamin Netanyahu, along with several key ministers in his government. And the charge leveled against them is extremely severe: genocide. This marks a really profound, almost unheard of legal escalation. It dramatically complicates international relations and redraws the lines of diplomatic engagement around the conflict.
Okay, shifting from conflict towards potential cooperation for a moment, there's also a report about the Abraham Accords expanding. That seems like one of the few positive diplomatic developments lately.
It does seem that way. Former President Donald Trump announced that Kazakhstan will be joining the Abraham Accords. Apparently, this marks the first country to join during his second term. He framed it as a significant step towards global bridge building and suggested that Kazakhstan's inclusion shows a growing recognition of the Accord's potential stabilizing role, not just in the Middle East, but stretching into Central Asia as well. A formal signing ceremony is apparently expected soon, positioning this as a key diplomatic win.
Okay, let's bring the focus back to Latin America and the U.S.'s direct security operations there. We have some specific, detailed reports about 2 recent lethal kinetic attacks authorized by the U.S. administration out in the Eastern Pacific. That sounds like a pretty major escalation in terms of rules of engagement.
It certainly represents a tactical and maybe strategic shift towards using much more direct kinetic force in international waters. The Secretary of War, Pete Hegseth, confirmed that 2 lethal kinetic attacks were indeed ordered by President Trump against alleged narco-launches drug smuggling boats operating out in the Eastern Pacific.
What was the justification given for using lethal force against these boats, especially in international waters?
Well, the official rationale, according to the Secretary of War, relied on intelligence claiming these 2 specific vessels were operated by terrorist organizations already sanctioned by the U.S., that these groups were involved in smuggling illicit drugs through a known, established trafficking route. The attacks reportedly resulted in at least 6 fatalities, 3 presumed male narco-terrorists per vessel, is the language used. Importantly, no U.S. forces were injured. The official statement was very direct. framing the action as essential for protecting the U.S. homeland and eliminating cartel terrorists who pose a direct threat.
Wait a minute. If the official line is strictly about counter-drug operations, why are we also seeing reports of a simultaneous, significant deployment of specialized ground attack assets? Things like the AC-130J Ghost Rider, stationed at the Comalapa base in El Salvador. Doesn't that specific type of aircraft lend more weight to the analyst's view that this is about broader strategic pressure, not just drug interdiction?
That is exactly the critical tension in this whole narrative. You're right, the type of military assets being deployed speaks volumes about the likely operational intent. The Trump administration's ongoing counter-narcotics push in Latin America is definitely visible. Satellite images confirm a significant presence at Comalapa. That's one of the 2 joint bases used by U.S. Southern Command, Southcom, for anti-drug ops. But it's the specific assets there that are telling. Yes, you see a P-8A Poseidon, great for maritime patrol, watching the seas, and a C-40 Clipper transport plane, standard stuff. But the real game changer, the eyebrow raiser, is the presence of an AC-130J Ghost Rider.
Okay, explain the significance of that particular plane, the AC-130J, for our listeners. Why is that different?
Well, the Ghost Rider isn't primarily a surveillance plane. It's a highly specialized ground attack gunship. It's operated by U.S. Special Operations Command, SOCOM. Its typical loadout includes precision-guided bombs and missiles, plus large-caliber cannons designed for hitting ground targets accurately. Deploying a SOCOM asset like the AC-130J signals a readiness for surgical, low-profile, and potentially lethal ground engagements that goes way beyond just watching boats or intercepting drug shipments. It suggests the operation is prepared, if needed, to target high-value individuals or command structures on the ground with extreme precision. It indicates a much deeper, intensified strategic commitment to disrupting cartels or maybe even terrorist networks at their roots. This kind of military signal absolutely confirms that the strategic risk level of the region is significantly elevated right now.
All right, let's transition now from those global security risks back to the domestic health of El Salvador itself. We need to look at the latest national indicators, things like fiscal stability, social issues, long-term pressures, to really understand the context underneath that tourism and security success story. Let's start with the budget picture and the major structural risks the country is facing.
Okay, the fiscal overview confirms what we've seen before. A continued heavy reliance on borrowing to fund the government's ambitious plans. The 2025 budget reforms total about $1,051 million. But look at the breakdown. A whopping 62% of that funding comes from loans. Only about 33% is sourced from available assignments, basically, operational revenue or existing funds. This high dependence on external loans points to a structural vulnerability. It raises serious questions about long-term fiscal sovereignty and how sensitive the country is to shifts in global interest rates.
And this reliance on borrowing, it's dramatically compounded by one of the most, frankly, chilling long-term findings in our source material, the projected economic hit from climate change.
Yeah, this is arguably the biggest non-political threat looming over the country's future stability. The sources present a really stark finding. El Salvador could potentially lose up to 36% of its GDP per capita by the year 2050, just due to the escalating impacts of climate change, things like severe weather events, droughts, major disruptions to agriculture. Now, when you put that massive potential economic hit alongside the current 62% reliance on loans for the budget, well, it highlights a profound vulnerability down the road. Any significant economic downturn in the next couple of decades will make paying back all that debt incredibly difficult, likely demanding immediate, very costly adaptation measures. On a slightly brighter short-term note, though, there is a small bit of stability. Reference prices for gasoline and diesel are set to remain unchanged for the current period, November 11th to 21st. So, temporary predictability at the pump, at least.
Okay, let's turn to the social front now, where the data reveals some pretty serious structural problems. The source material even labels one issue a moral and social debt. The scale of the child support crisis seems staggering.
The numbers really are a stark indicator of widespread social strain. Between 2024 and 2025, over 27,400 people were legally sued for unpaid child support, and the total accumulated debt was over $31 million. Critically, the data shows that men, as fathers, account for 97% of these claims. This goes way beyond just being a legal enforcement issue. It's a massive systemic problem that directly impacts the daily lives, the nutrition, the well-being of thousands upon thousands of children. And, for a global investor looking at the country, this isn't just a social issue over there. It's a long-term risk factor. It signals potential future instability, future strains on public welfare systems, and ultimately, maybe even compromised workforce productivity down the line.
And layering onto that social debt is this persistent gap in the labor market highlighted by the gender pay gap figures.
Absolutely. The labor data confirms it. Men in El Salvador earn, on average, 24% more than women. That's a wide, persistent gap, and it reflects some pretty fundamental structural inequalities baked into the labor market. This kind of suppression of economic potential for a huge chunk of the population inevitably acts as a drag on overall national productivity. It limits the kind of long-term sustainable growth the country is clearly striving for.
And finally, on the domestic front, what can we say about recent infrastructure development versus the immediate safety concerns that sometimes come with it?
Well, infrastructure development is clearly booming. That's visible. We see the opening of the modern Chalchuapa municipal market, significant new hotel investments going into the historic center of San Salvador, directly linked, no doubt, to those security improvements we discussed. However, this really rapid pace of development isn't without risks. Urgent safety concerns are emerging. Tragically, 2 workers recently died during underground cable laying operations right there in the historic center. In response, the Minister of Labor publicly called for reinforced safety measures. It highlights this critical need for much better labor protection standards, especially during this intense period of modernization. Otherwise, progress risks being constantly undermined by these kinds of preventable workplace tragedies.
Okay, moving to our final set of national indicators now. Let's touch on public health strategy, some regional logistics, and the cultural elements that shape El Salvador's identity and also help attract international attention. Starting with public health, there seems to be a significant investment into modernizing how people access medical consultations.
Yes, the government is putting substantial money towards upgrading healthcare delivery. They plan to put over $11 million into the budget for Hospital El Salvador, specifically to set up a new telemedicine program. Goal is pretty clear: improve access, especially for people in more remote areas, and hopefully increase efficiency. But it's being met with some necessary caution from doctors, specifically medical internists. While they praise the investment, they're stressing that telemedicine has to be seen as a supplementary tool. They argue it absolutely cannot and shouldn't replace traditional in-person clinical consultations, especially for complex or serious health issues.
And on the international cooperation side, we see El Salvador actually acting as a bit of a logistical provider, helping out regional partners.
That's right. This seems to be a point of diplomatic effort and also showcasing logistical capability. Following a direct instruction from the president, the Ministry of Health successfully organized and delivered 7 tons of medicine to a hospital over in Jamaica. Efforts like this demonstrate the country's growing ability for rapid logistical deployment and help reinforce its image as a reliable regional partner, capable of providing aid and cooperating across Central America and the Caribbean.
Do we have any recent internal public health data, say, on specific disease trends?
We do. Social Security data covering January 2024 through July 2025 registered 240 new cases of HIV. The analysis of that data clearly shows the male population having the highest incidence rate. Geographically, most cases were concentrated in the departments of San Salvador and La Libertad. Information like this is obviously crucial for planning and directing targeted public health campaigns for awareness and prevention efforts.
Okay, shifting now to tourism and culture. The country seems to be using high-profile events quite effectively to boost its global image and appeal.
Oh, absolutely. Culturally, they are definitely leaning into their national identity with some real flair. The celebration of National Pupusa Day 2025 in Olaquilta apparently made international news, not least because they prepared the country's largest ever pupusa. Apparently, it was so big, it required a crane to lift and move it. This annual event is a really effective way to boost national pride, celebrate a core part of their food identity, and generate a lot of positive, fun media attention.
That is certainly one way to use national infrastructure, bringing in heavy machinery for a food festival. And major sporting events, those are clearly bringing in significant tourism numbers too.
Yes, these high-profile sporting events are a very strategic draw. That Clásico de la Andes match, the Legends Classic, featured huge global soccer stars like Messi, Iker Casillas, alongside El Salvador's own legendary player El Mágico González. That was a massive international magnet. These kinds of highly visible events successfully leverage that improved security environment to host global entertainment, which directly reinforces the country's marketing message as a top-tier event destination.
And finally, just a quick mention of a new partnership focused on animal welfare.
Yes, there's a notable new social initiative, a partnership between the president and an international figure, Niall Harbison. They've apparently formed an alliance to launch what they're calling a model animal rescue program, specifically focused on tackling the long-standing issue of street dogs in the country. This move seems designed to leverage high-profile international partnerships for animal welfare, aiming to improve the country's overall quality of life and maybe soften its image globally as well. Hashtag outro.
So what does this all really mean when we put it together? We've navigated through the complex interplay of volatile global finance, the rising tensions in regional and international security, and that really multifaceted economic story unfolding in El Salvador. We've tried to isolate the key data points and the underlying structural challenges. So here's a quick 60-second summary of what we see as the 3 most important conclusions from this deep dive.
First, crypto market caution and weak institutional support. Look, despite that recent technical bounce in Bitcoin and Ethereum prices, the underlying structural pressure feels acutely high. We see this in the largest scale selling by long-term veteran holders since last July, and critically, in the sustained decline in money flowing into Bitcoin ETFs, they've shed over $2.3 billion from their peak. This weak institutional demand simply isn't absorbing the current selling pressure. It confirms the market is firmly in a correction, and that $110,000 resistance for Bitcoin looks like a very tough hurdle right now. Second, El Salvador's growth is security-driven. While the nation has brilliantly marketed itself as a global Bitcoin hub, complete with tech infrastructure and booming tourism, the direct economic impact of Bitcoin itself remains hard to pin down, especially according to observers like the FMI. The surge in tourism and investment seems overwhelmingly driven by the dramatic improvement in national security. That's the main engine right now, which in contrast sharply with the slower pace of real-world Bitcoin adoption metrics, like those falling crypto remittance numbers. Third,
regional security risks are heightened. The kinetic security environment, particularly involving the U.S., is visibly escalating. You have rising tensions between Russia and Venezuela over potential military aid. Simultaneously, you have the U.S. employing lethal force in anti-narcotics operations and deploying specialized SOCOM ground attack assets like the AC-130J in El Salvador. Taken together, this signals a fundamental increase in strategic military maneuvering across the Eastern Pacific and the Caribbean. Regional stability risks definitely need closer watching.
That was an incredibly comprehensive look at where finance, security, and national development are intersecting right now. We really hope this deep dive has given you the clarity and the detailed context you need to fully grasp these complex events and their underlying structural implications.
We definitely value your time and attention. We look forward to continuing these kinds of explorations with you, trying to provide the depth and the analysis that you need in this noisy world.
And if you did find value in these insights today, please remember that your support is really crucial for us to keep doing this kind of work. You can collaborate or donate via PayPal or QR Bitcoin. You'll find those links easily in